Hello, welcome to the Texas Real Estate Show. Stephen is not here with us, but we definitely have the empty chair just for him, waiting for him. My name is Courtney Guerra, and I'm here with my partner in crime, Laura Zuniga. So we're going to be talking about a few things today. Go ahead, Laura, introduce yourself.
Hey, as she said, I'm her partner in crime. My name is Laura Zuniga, Senior Loan Officer here at Lone Premier Mortgage, here to help you find and supplement all those financial needs for investment homes, primary homes, secondary homes, or whatever the game plan may be. Let's get together and get that plan going.
Let's just call it what it is. Any piece of real estate, right?
Any piece of real estate.
Let's go for it.
Both of us diverse in that. Here to help.
All right. So, Kay, what's first up on our agenda?
So today our first thing that we have to talk about is something I guess that it's been happening for a little bit, but it's kind of come to a head now with real estate price fixing is what they are calling it. It's essentially it's called algorithmic collusion. So basically what's been happening is that landlords are using an algorithm and they're putting information into an algorithm, and they're saying that it's a price fixing cartel. So there are four big rental companies that are kind of trying to match each other via the algorithm. I don't know if they're talking to each other, but
so pretty much AI is running the show right now. I can't say that that's really like a big deal because any business owner is going to do what? See what they can get the most out of it, right? And what are they going to do? They're going to see who's successful in selling it for what price and what they can get away with. Yeah? I mean, even for the mortgage industry, when we do the appraisals, what are we doing? We're looking at the last 6 months to a year to see what houses have sold in that area to give a value for that property on what it's going to be sold for. What do real estate agents do whenever they're going to list a house? To give them a value for their house, they're going to look up all the properties to see what they've sold for. So, I mean, it's basically about the same thing. Wouldn't you agree with that, Laura?
I just find it funny, the comment about the cartel. Why do we have to associate everything with the cartel? I just think that's funny. But, I mean, most landlords, right, we want the most buck for our investment property. I'm pretty sure I'm not the only one to talk about, but we do have to be a little bit more humane and be within, certain market values and reasonable. I mean, not to say that every time you go to the ballpark game, sometimes your price to pay for your parking ticket is $20 to $35. So
I know.
I
just took my kids to the.
Sometimes there's price gouging, but that's why there's laws and everything that we should implement, and we should stay inside those lines.
I think it's all about supply and demand. And in this, they're talking about a major city. And that's probably not having a lot of land in it. And I guarantee you, just like everybody else is feeling it in these last couple of years, everything has went up in price. So what do we want to do? We want to blame it on somebody else.
that makes sense.
That's my opinion.
Now
So
we have cartel.
they're not
That's
blaming
awesome.
the cartel. They're just calling. They're saying apartments listed by four major property management and property owners they're calling them a cartel. And it says
that see that Netflix series.
price rental cartel.
Rental cartel gouging.
But they're saying that their displayed rents were $120 to $790 higher than other property managers. So that's just
wow.
They are, kind of getting together and people like in the same area, and
they're raising the rents.
Yeah, they're raising their rents themselves. So I think that's what the major problem is just they're talking to each other, or the algorithm, they're using the same algorithm. Yeah.
We'll boycott everything. Move there.
Or just like,
I mean, eventually, if it's something that they're breaking the law, we're pretty sure that they're going to get caught. Look at all those people that were doing, at some point in the 90s, I remember a lot of news were all over talking about insurance fraud of people actually, causing accidents to do claims. So I'm pretty sure, at some
In
point.
the 90s, that happens now.
Oh, that does.
People do that with Ubers because Uber was
I'm not
paying.
so associated with media, so much of other news other than the market, but I did hear a lot of that happening like years ago. I'm not sure if it's happening now, but I know that was one of the hottest topics. But I think this is the hottest topic in town because, everybody's looking at rental market values and everybody's looking at buying homes and interest rates. So that's why it's a thing now.
Yeah, I think
The
people
thing
are.
is that unless investors have locked into a good interest rate from, a while ago, sometimes to purchase a house as an investor right now in commercial properties, they're losing their butts because of the interest rate differences. And we've even seen here in Houston that some of those apartment complexes have went under because they can't afford when they have to redo their loan. So doesn't those prices kind of have to trickle down to the rent?
And then property tax rates have not quite given a break to investors.
No, not at all.
To homeowners, yes, we've seen the benefit, but as an investor, not so much. So people are getting creative. I see that.
They're trying.
So they each cartel-wise, are they each taking a corner? This is my corner.
I want to see that Netflix.
You gotta
series.
pay me a premium for being on this corner.
But hey, I mean, it's not illegal yet. That's what he's putting it. They're like a lot of senators are trying to make it illegal, so they're putting it in a bill. So probably more than likely, eventually, it's going to be something. But I also think that maybe they don't even realize that they're doing it because it's AI. So they're just trying to cut corners by not paying somebody to do that work. So they're just putting it into an AI system, and they all, they.
I mean, that's what we're using now. I mean, when we use CMAs or trying to get, see what a property is valued at, we're definitely not with pencil and a paper writing down numbers.
I mean, even social media, is AI. You're probably talking about, hey, going to Jamaica, and then all of a sudden on social media you get this cruise for Jamaica,
Mhm.
So everything is AI based now. Up to what extent that the government can control, who knows? But
AI
I'm pretty
is
sure
scary.
AI is everywhere.
Oh yeah, it's probably the scariest thing ever. Actually, I'm a little terrified of AI.
Big Brother's always listening. That's what I'd say.
I like to say that back in the day, everybody was like, "Oh, I'm afraid of Big Brother. I don't want my Big Brother to listen." But now we're Big Brother because all we take videos of everything and you
Everything is
record
out there.
someone. Yeah,
Yeah,
so
very true.
we messed up.
So talking about social media and AI, there's been a few real estate agents that have gotten extremely, extremely creative with how they've gotten on social media to not just be like, hey, here's this house, look at it. They've done some major different stuff. So one of them is a guy that likes to, he's very tall. That's all I can remember in all of his videos. He's extremely tall. But whenever I'm watching his videos, he will literally be like, yes, this is a great countertop. And he'll, next screen, you'll see him laying on there. And he's all like, yes, nice and long for all you ladies out there.
Okay.
And he's kicking his feet in the back like he's just, a girl having a nice little time on the kitchen counter to
He's
show
on
the
the
house.
phone.
But it is
I have
definitely
not seen those
entertaining.
videos.
Laura, Kay, do you want to play that video real quick?
Yeah, I'll play it for you.
How tall is he? Like 6'5"?
I have no idea, but whenever, countertops in brand new houses go like mid-thigh, that's pretty tall.
Is this the guy turning on and off all
Yeah, it's that guy.
the lights? Okay.
That's a great way to put it. I don't know why that was so funny to me. Like, is that?
That's creative in its own way. But yeah, that means serious disrespecting.
And then I don't know if this is kind of a throwback, but I don't know if you've ever seen on social media people trying to do the Harry Potter challenge where they look like they're flying on a broom, but in reality it's just pictures of them jumping up every 2 seconds.
No.
There is another real estate agent out there that literally says, point of view, you're a realtor, and this is Harry Potter. And he goes through the entire house on the broom, jumping to give you a tour of the entire house. It was definitely entertaining. I don't know. I was probably watching him more than I was looking at the actual house, though.
That's very true. You have to rewatch the video.
It was hilarious. But is there some real estate agents that are taking it too far? Do you think so? Have you seen any that have taken it too far, Laura?
Okay, I'm gonna confess. I do not look at social media a lot. So I'm not on I am on TikTok talking about loans, but I'm not on TikTok all the time looking at real estate or realtors specifically. And so I'm just looking at these for the first time, and I think they're very creative. You know, especially in this market, realtors do have to get creative to and know their communities so that they can help buyers and keep that production. So prospecting consistently, and this is a great way to prospect doing creative videos. Which
I think it's
jumping. Hey, you get your cardio in for the day.
It makes it great because they're able to. You have to find a way to keep people watching the videos.
Yes. And so there is one that's over in San Antonio, I believe. His name is Brad Scott. And he's a realtor that loves to do videos. But in his videos, he's very vulgar and has a lot of cussing. Do you think you can be a successful real estate agent in doing that on social media? Well, he's done it.
Everybody's unique in their own way.
So looking at his stats, he has 160,000 followers on Instagram. He's made a career out of doing this. Now, would I do that? No. That is not my language. I don't talk like that. I don't believe my kids should talk like that. But there's a lot of people that think that there's no big deal with that. And if that's your cup of tea, go for it. That's my opinion. What do you think?
I mean, it's like Howard Stern, right?
Yeah.
I kind of pictured him, when you said that, I pictured him like Howard Stern.
Oh, okay.
Back in the
Old
radio
school.
days,
Okay.
So, I mean, everybody, not that I listen to Howard Stern, but
Sure.
no, but it's like everybody has their own genre.
This is
right?
a Maury show.
So I would say this is yes. Some people like Ellen. Some people like Oprah. Some people are like, I don't know. I can't name any others. Those are the only ones that I've known.
Dr. Phil, the Maury show.
I don't know.
What was a really bad one that had a lot of craziness?
Jerry Springer?
Jerry Springer. There we go.
That's old school, but I mean, everybody has their own genre, right? But I mean, in this market, you have to welcome any genre. So if that's your favorite one, then they had it. And I'll give you a loan on it. So
I'll give you a loan.
I'll give you a loan.
Yeah, just call me. I won't cuss, but you can cuss as much as you want as long as you're sending business my way.
All your other language preferences, speak with your realtor, Brad Scott, but for your loan, call me.
So
Let's keep it clean for me.
I just want to read some of the comments from his videos and things like that.
But some people, profanity is their second language. It was at some point in my life where there was a season that was like heavily on every sentence that I used, and I'm trying to be more cautious about it and not use it as much. which I am successful at days and successful at it. Not so much, but everybody's. I mean, what do you think?
I want to hear some comments on this. Let's hear from the people what they think.
So for the video that we've shown, or that we were kind of showing everyone, one of the comments says, some of the comments are like, bro, I'm showing my realty lady this. That's what someone said. And it's like, other people are like, now that's how you sell a house. Someone said, does this come with an HOA? Which, valid question.
I'm seeing you're a creative genius. I say this every trip, but bro.
But I mean, sometimes I think some words are okay, like on certain things that I'm seeing on his profile. But then, I mean, there's other languages to me. My preference, not everybody's, but just me.
Yeah, there's a lot. I mean, people are like, wow, I'm not even selling a house. This is making me, or like purchasing a house, but I'm still watching this. Like, and then people are like, definitely a great investment property. And they said, OMG, if I owned in Texas, you'd be hired. You're too freaking much. LOL. So,
I guess he's giving his authentic self.
yeah.
You take it or leave it. You either love it or hate it, kind of thing.
Yeah, it's one of those kind of like, and people want him to,
Yeah, everybody has their own genre.
yeah. There are a few people that have been doing this. I think even if he took out the cursing, because I don't think past the first 30 seconds he's cursing as much. He just curses a lot in the first parts just to kind of get people to like
Maybe
watch.
to get the viewers.
Right.
Okay.
To be like, oh my God, I can't believe this dude's, saying this stuff. What the heck? But after that, it's kind of
Professional.
yeah, he's not. I mean, I wouldn't say he's the most professional, but he goes and he doesn't curse as much.
I'm looking at his video right now, one of his videos, and there's no sound, and I'm looking at the video, and I can see like what he's trying to say about the house, about the home, about the fireplace. So, I mean, I think the video's it's a good video.
Yeah.
Perhaps.
And a lot of real estate agents actually follow him. Some of our real estate agents follow him.
Sliding glass door with his butt. So I know where to go from there.
So it's like, hey, I think it's and he does it on purpose because he calls it aggressively touring homes. So he's definitely
attention grabbing.
Yeah, it's
Was that the word coat on the wall? That's an interesting one.
No, I do.
And someone said in one of his videos, they like texted you, I'm interested in, so people are.
I mean, if I was not listening, just looking at the video, I would be interested in probably buying this house because I don't like the bathroom. But that's something like I like the closet. So, I mean, sometimes, but it's a good video. I like the video.
Yeah, he probably gets, decent, at least a lot of people reaching out to him for whatever they want. I guess, like he might not be closing, but at least he's getting clients and things like that. We don't know what his closings are and things like that, but
Prospecting, a little bit, and prospecting is the name of the game.
Right.
He is an established real estate agent. He's in the game. He's getting out there and getting it.
So he's making some type of money doing it. And then also he probably makes money from sponsorships and things like that just off of social media because, I mean, he has over 160,000 followers and his engagement is good and people love him. Like, I mean...
I haven't seen any brands in this video yet.
Yeah.
Only thing I saw was Subway for Subway tiles.
So I haven't seen any brands, but he is doing a thorough walkthrough through the house and explaining it. So I think that's like if I was like in another state and wanting to buy a house, I would definitely probably like him to show my realtor to show me a house that thorough. So, and then peace out.
Yeah. He seems nice. He seems like a likable guy, but he's got Whataburger, he's got HEB on, some of his stuff. So he's doing okay. I mean, hey, Whataburger and HEB, that's really all you need. He's got an RV company that so hey, he's doing. We should take notes. Maybe let's not curse on our videos, but maybe we should start learning how to flip.
I mean,
start every
for what
podcast.
he's doing,
Should we start taking gymnastics? You better move up the stairs.
for what he's doing and the videos that he's showing, like I personally like the videos without hearing all his information.
Are you ready, Laura? Just close your eyes and imagine me in a pink tutu, like this, going through the house, showing a house out. Would you watch that?
Hey, content, right? Prospecting.
All right, on to some actual good stuff that we can actually teach y'all out there. You've been getting very heavy into the reverse mortgages, haven't you, Laura?
Yes.
Do you want to kind of explain how the reverse mortgages work and what's kind of the upside to them, any downsides to them?
Well, reverse mortgages, first of all, something that everybody has to have, there's a lot of information out there. So most of reverse mortgages, you have to be at least of 62 age, and that's like if you're married, so it's like whoever's youngest, right? So if the wife is younger, she has to be at least 62 years of age or older to tap into the mortgage equity. So that's number one kind of rule of thumb, right? So, and this is mostly for seniors who can now leverage on their crucial cash in retirement assets and all of that out of their home, right? So now reverse mortgages is not for everybody. It's for, it's a certain genre again, right? It's a certain client that might be in a situation where this might be a perfect loan. Now, something that I learned, it can be on the existing home that they own, or they can actually do a reverse mortgage purchase, which is something new that I've learned here lately. And there's different things that has to be looked at. Now, something that I did find that I did get a couple of questions is like, what does my credit score has to look like? So there were buyers or interested parties that their credit scores are, in the high score brackets, which that's not something that too much of a worry. But there was some that were in a lower bracket and lower, like in the very low, which sometimes.
Can you give like a credit score range as what you consider like a low credit score?
400s.
Okay, continuing on.
So to keep that in mind, and in the 500s, so to keep that in mind, yes, guidelines don't necessarily say, or some companies do not, some lenders do not have overlays for credit score, but they have to look at a thorough credit report. So what does that mean? That means looking at their collections, looking at how much credit card debt they have. In a sense, they have to look at, the bank cannot lose money or be upside down necessarily, right? So they do look at all of that. So just be cautious if somebody just comes out there promising that there's no credit score that is looked at. Yes, there is. In some cases, the borrower has to put a life expectancy escrow, which is another case. And mostly this is common in borrowers with lower credit scores sometimes, or depending on how much they have. So there's a lot of things to look at. And another myth that is out there is that there's no mortgage payment. Well, technically, principal and interest, not quite, but you are still responsible for your taxes and insurance. So that's something that you do still have to consider. And two of the borrowers that I got on the call, they were actually telling me that they were told there was no taxes, no insurance, like they never had to pay a cent ever on any of that. So it's just education wise, right? It's taking a step back and actually, you know, telling them what is expected and what's not expected. Now, this is great for baby boomers. There's sort of about 10,000 baby boomers, so I hear the statistics, that are turning 62 every day. 10,000. So that's a lot. So,
and in that age bracket, they're not in the credit card era where you just credit card everything. Their lifelong dream is buy a house, pay off the house, retire. That's kind of how they try to do it in line. So most of them will have paid off houses.
Yes. And then with the new, talking about genres, a lot of builders that I've seen lately, they have retirement communities where, and this is perfect.
55 and up communities.
Which is perfect for those baby boomers that are turning 62 and want to do, a reverse mortgage purchase. So this is perfect. And this is perfect for real estate agents to also, advertise. Yes. So another source of income, right? And pretty much the retirement population, they're going to want that comfort home, and the stability to stay and retire, and it's your settlers pretty much.
I like that our government has really tried to protect, especially our older citizens. So a lot of these reverse mortgages are very heavily, protected. They protect the borrowers. They have a lot of regulations. They have a lot of rules to make sure that whoever is getting a reverse mortgage understands what they're getting into. They're required to have counseling most of the time before they take out that reverse mortgage. Is that correct?
Yes. And then also something that I learned is for single family homes, right? That's always a good one. For PUDs and also FHA approved condos, which I did not know that was an option. Now, it is also allowed for 1 to 4 units, but 1 unit, of course, it has to be occupied by the retirement borrower. And also, these programs, this reverse mortgage is not allowed on secondary homes or investment homes. So it has to be a primary residence.
So they have to reside in the
Yes. And then something else that I learned is also for new construction. So new construction is an option as well.
Can you kind of explain how the process works if they're wanting to do a reverse mortgage purchase? So they'd have to currently live in a house and it be paid off. Is that correct?
So a reverse mortgage purchase is a house that they're going to buy.
Okay.
A reverse mortgage is a house that they live in.
Okay.
So, but regardless, we still have to pull the credit report. We still have to look at the financial situation and assess everything so that we can be able to. So talking about credit guidelines, they also allow, a 2-year of bankruptcy if they had a Chapter 7 or Chapter 13 as long from the discharge date. I do want to clarify that. And then also no major delinquencies, sort of short sales or foreclosures in the last 2 years that require seasoning. And if it was an FHA, it's 3 years. So there's all these other dynamics that happen behind the scenes, right?
So pretty much there's a lot that has to go into a reverse mortgage, and you need to reach out to somebody that knows what they're doing. Laura.
And bad credit won't disqualify them. So something really key important to know, that bad credit will not disqualify them, but that will require like a tax, insurance account, life expectancy to be set aside. That is normally considered as a Lisa. So if you hear anybody talking about a Lisa for a reverse mortgage, it's actually what they're talking about.
I was like, who's Lisa?
And I was like, oh, that's an interesting, easy term to learn. especially for those who have credit challenges, you know, for this type of loan product. Now, lifetime expectancy, and Lisa is spelled as Lesa, not I. So, it's just a retired, as a retired population knows, they should know really their options and really speak with a professional that knows the difference and can be able to explain the loans and what funds are needed, or if funds are needed from the borrower. Not in all instances money is needed from the borrower, right? So super important to get that information and,
To explore all your options.
explore your options before you get into it and see if this is the right loan product.
Okay. A lot of things that I've been getting asked lately, which is not about reverse mortgages, but I've had many people reach out to me, especially since, the feds have talked about lowering interest rates for what now? 8 months?
Since the beginning of the year.
Since the beginning of the year. And we are now in.
Well, since last year. They're always talking about it.
Yes, they're always talking about it. It's not
coming in
really
spring.
happening
It's not
at
here
this
yet.
point in time.
Yes.
So I know a lot of buyers, especially now with everything being so expensive, are trying to find ways to save money. So I've had a lot reach out to me about assuming a mortgage, and exactly what that entails, what are kind of the upsides to it, what are kind of the downsides to it. For me, the way that I explain it as far as assumable mortgages go is you're purchasing a house from somebody that has a lower interest rate than what the current market is. Most of them are during those COVID days when we were at 2 and 3%, which we will probably never see again in our lifetime, if ever. So they're really trying to tap into that. So every FHA loan can be assumable as well as VA loans. And there is a lot that get FHA and VA loans. Now with conventional loans, they can be assumable, but 9 times out of 10 they're not. So there is that option. It's very easy to figure out if you, as somebody that's wanting to list your house, to be able to figure out if it is assumable. Just go to your closing disclosure that you were given in your closing package when you closed on that house, and there on the second page it will say whether you are able to do an assumable mortgage or not. From there you can reach out to your current mortgage company to talk about it. Now, what are some of the kind of advantages for the buyers whenever they want to do these assumable mortgages? They're going to get a way lower interest rate than what the current market rate's at, which is great. We're in the 6s and 7s right now, unfortunately. You have a potential to get a 2 or 3% interest rate. Also, when you're assuming this mortgage, you could save on some closing costs as well. 9 times out of 10, you're not going to have an appraisal. You're not going to have to redo a lot of things that you would have to do if you were purchasing a house and getting a new mortgage. Now, great, those are the advantages. Let's talk about the disadvantages.
Let's talk about reality.
Yes, so those are great things, but let's first talk about the process it takes to get into an assumable mortgage, right?
Mm-hmm.
You don't have any choice of any other mortgage company to go through except for the person that has that mortgage. You have to go through their mortgage company.
Correct.
With that being the case, you have to meet their requirements to be able to be approved for that assumable mortgage. You're going to have to show that you can still pay it. You're going to have to show credit worthiness, and every single lender is a little bit different on what they require. So those are things that you're going to have to meet. With that being said, you're going to have to probably be with a special department. And unfortunately, they usually don't make money on these deals. So,
what happens if you already have a mortgage person and, because you're already looking at houses and things like that, and then you find out, oh, I can get an assumable mortgage on this property. So like, say Laura's my mortgage lady, and then, Courtney's like, well, we can get you an assumable mortgage. What happens? Do you just switch to their mortgage company, or you're like, bye, Laura?
So yeah, for a seller that is using their mortgage to be able for it to be assumed, we really can't do anything about it because we would have to have on our side a new mortgage. We can't help with the assumed mortgage that's already there with another company that we don't work with. So you're going to have to go through their company. You would not be able to go with us. The only thing that we can help with is, which I'll be talking about here in a minute, is you might need a little help with what the assumable mortgage is with what the property is actually valued at. So we'll talk about that in just a second. That's something that we can help with. But be ready whenever you're doing an assumable mortgage. You're probably going to be at a 45-day closing, maybe even longer. It's going to take a little bit. You're going to have to jump through hoops. You're going to have to call and make sure that they're doing what they need to do to be able to get your mortgage to the closing table, right? Now, here's where some of the risks come into play, right? If I purchased a house, 3 years ago, and I've been paying on that mortgage now for 3 years, and the value of my house went up, I might only have a balance of $150,000 on that mortgage. You can only assume what the balance is. You can't add anything more to that. So if it's at $150,000 and they're selling it at $200,000, you're going to have to figure out a way to pay that seller the additional $50,000 that's owed because the property is valued at $200,000 and not at $150,000. That's where we can come in to help get a second loan on that. But keep in mind, when you do these assumable mortgages, be ready to have a 15 to 20% down payment most of the time. That's kind of normal because with second liens and getting that second, loan to help you with that down payment, the risk is a little bit higher for that lender, and they don't want to give any more mortgage than about 80 to 85% LTV. So that requires you to have about a 15 to 20% down payment.
Yeah, and I think one of the myths about assumable mortgages out there is that I'm going to get the low interest rate. Yes, that's true. But then they also think that they're going to put 3%, 5% down payment. And everything's going to be that. Most folks out there believe that this is like they just hit the lottery with an assumable mortgage, which is not the realistic, right?
Yes. So it can work.
I mean, it can work in certain situations. For example, if they're not really asking, so for example, they just want the 150s to be assumed and they don't want any additional funds, right? And if they have that 15%, of course, obviously that might work, right?
Yeah.
But these are also people who have a legal status in the country. It's not for people who do not have a status in the country. So there's a lot of social media out there with incorrect content. So before you get into an assumable mortgage or start thinking about it, come to the source first. Let us educate you on if it can be done.
Yep. Because
realistically, nobody is going to give you an assumable mortgage for $7,000 or less than that and just walk away with a golden ticket. It just doesn't quite work like that because a lot of people also think that their credit doesn't have to be looked at, that they can qualify with 50% DTI, which is not a fact because these lenders actually have lower, in most cases, DTI ratios, where we can qualify you maybe at a 47 or a 50, on an FHA. They actually are more conservative because why? They don't want to go through this process again, right, with another buyer. So it makes sense, but be very cautious when somebody is promising you a assumable mortgage.
Yes. And then keep in mind that usually these are FHA and VA loans. Those are probably 90%. So you're going to have to qualify for an FHA or VA loan. You have to normally be able to qualify for that to be able to assume the mortgage. Now, there is a myth that if you're assuming a VA loan, you have to be a VA. That is not correct. A person that is not a veteran can assume a VA loan, but the only thing that it's going to hurt is possibly that seller, because with VA loans, there is what's called entitlement, and that is able to get them another house or to get them a house. If that entitlement is taken away and it's tied up into this loan, if they give it to a non-veteran, it's going to be tied up into that loan until that loan is either refinanced into something else or paid off. So they do not get their entitlement back to be able to go and purchase another primary residence if they're moving somewhere else. So that can be detrimental to the VAs. to the veterans that have these VA loans. So that is something definitely to watch out for. Just reach out to somebody that knows what they're doing, like me, to be able to tell you whether this is even an option for you.
Right, and it has to make sense also for the VA, because honestly, you can't just assume that, they're going to give up their rights, because they very hardly worked for those, VA benefits. So
Yep, that was
let's
correct.
let's keep everybody respectful and, what they truly worked very hard with. So another thing that I was looking at, that investors can assume assumable mortgages, right? Which is something new that I just learned not too long ago, which to me, it was interesting.
So once again, just give us a call if you have any questions about it. We can definitely walk you through the process for your certain situation. I think that's about it for today. Kay, what do you think?
Yes, but I have one more question.
Go ahead.
It's a
Go for it.
dumb question.
There's no dumb questions. There's never a dumb question.
It is a dumb question because I think I know
You know
the
what's dumb
answer.
is if you don't ask the question and then you never get
And
the
then you
answer.
assume the wrong answer.
Okay.
So, an assumable mortgage is only for people if the previous homeowner essentially is still paying mortgage, like still paying on it, correct?
Yes.
So it can't be someone like, oh, okay, well, I bought a house at 3%, but I paid it all off already, so now I'm selling it, and I want to get that assumable mortgage. I still want that 3%. You cannot do that, right? You're
So-
basically taking over the previous owner's mortgage, but you're
That's
still
correct.
paying them.
You are literally just transferring that loan into the next buyer's name. That's what you're doing. So if there's no loan, there is no assumable mortgage.
Perfect.
But 9 times out of 10, most people do not have their houses paid off. And most people are usually moving every 7 to 10 years. So there are a lot of assumable mortgages out there. There are websites as well that are completely revolve around finding assumable mortgages, what their interest rates are, what they currently owe on it. So there are things out there that you can actually look at to be able to see if that's something you want to do.
But that's all. I just wanted to ask my silly questions.
I think the most common question that I get about assumable mortgages is that they can put 3% down, and that gets them into a pickle. So, especially with thinking that they can get down payment assistance, assume a mortgage, and bring almost no money down. So,
Well, you know,
get your sources, get the information correctly before you go down that path.
I will tell you kind of statistics, just in my world, maybe in Laura's as well. When we look at buyers, maybe 1 out of 25 buyers have that 15 or 20% down to be able to even make that work. Is that correct? Is that about a pretty good statistic?
It's not in my world, but okay.
Well, what do you see on your side?
Most of my buyers are first-time home buyers, right?
Mhm.
And yes, I do have maybe like a 40% of investors, but most of the buyers that are trying to buy a home that are first-time home buyers do not have that amount of money, especially the ones that want to assume a loan. They are thinking about down payment assistance, including that. They want that 3% with the down payment assistance, that's not being
That's not realistic with an assumable mortgage.
realistic expectations, should I say. So,
Yes, definitely think about 15 to 20% down before you even touch assumable mortgages. That's definitely going to be a requirement.
and not
on most.
combine them with the down payment assistance. That's super important.
Yes, because you're just assuming somebody else's mortgage. You definitely are not purchasing and being able to get those benefits from a new mortgage. That's pretty much it for today. I think we did pretty good for ourselves. We did miss Steven today. He should be back next week. But how do we get a hold of you, Laura?
You can contact me at 832-274-9841.
And then for me, my name is Courtney Guerra, and you can contact me at 832-409-7908. And once again, both of us work with
Don't start with your mortgage.
That's you guys were going to say it at the same time.
and that is it for the Texas Real Estate.